Hey guys, Stock Saturday, and it's a rare green week for me while the market is down. So looks like the S&P is down a little under 1%, and Nasdaq's down a little over 1%, and I'm 4% up. So not too bad. The miners are sort of basically doing all of the work here. Rio Tinto sort of had a good week, Vale and Glencore, and then all my gold and silver miners. So yeah, pretty happy with that. Not any sort of earnings this week, but quite a lot sort of going on. So I'll go through sort of some bits that have been on my mind. So the TSMC revenue, I think this was out last week actually, but I missed it. And yeah, it's 13.5% down on August last year. Not the best, but it's sort of in line with most of the other figures sort of since March. January and February were up, but yeah, it's sort of broadly in line. And they did say this year would be a sort of a rough, sort of maybe flat, maybe a bit down year. I think they were sort of hoping it might be, a little in the green, but yeah, can't have everything. And they still look a decent buy to me, even if I'm not sort of buying them myself. Already got sort of fairly big position in them, and sort of with Broadcom as well, and some of my others. It's just sort of something that I'll hopefully add to later on, but not right away. So this sort of maybe given a bit of a sort of negative sentiment on Nvidia and AMD and people like that, just sort of showing that at least the AI hype sort of isn't going into TSMC's numbers right away. Obviously, this could just be offset by lower iPhone manufacturing, for example. Nvidia could be rocketing away and all the numbers are in here, but other customers are sort of lightening up. But yeah, it's an interesting number to keep track of. So I sort of missed this before. In sort of end of July, Volkswagen invested $700 million into Xpeng, one of the sort of Chinese EV startups, I guess you could say. Not really a startup, but they're not really that new. They are at least making cars. So they bought 5% of the stock and are announcing a strategic partnership to develop two new models to be rolled out in 2026 in China. And I just sort of see this as maybe a little bit of desperation that sort of the Chinese sales really aren't going all that well. The one site I do sort of keep up with is Clean Technica. They sort of give you monthly sales data sort of per region, and every time they bring out China, it's BYD sort of right at the top, and Tesla, not far behind, and sort of even in the top 20. There's sometimes sort of the VW ID3 or ID4, and that's about it. And if you look at sort of per manufacturer, they're not really there. I mean, they're the best of, the Western brands aside from Tesla. But yeah, it's not going particularly well. That's in EV sales, of course. In ICE sales, or petrol and diesel, they're sort of dwindling and still struggling a little bit. They're actually the biggest group, I believe, in China in total for ICE sales, but that is where they get an awful lot of their money. The sort of premium Audis and VWs and that sort of thing. And obviously, China are at 30% EVs in terms of new sales now. So it's only going one way. So unless VW can sort of push on with their electric sales, or whether this sort of thing, new models can take off, then they're going to struggle. And I just sort of see new models by 2026 as sort of a bit little too late, to be honest. So yeah, that is sort of part of the reason. I hadn't seen this, but you were sort of getting the feel of it with sales numbers, and sort of part of the reason that I sold off half of my Porsche, and I am sort of eyeing up selling the rest, to be honest, to go for sort of more, more things that I've got more conviction and confidence in, basically. I'm still happy with Stellantis because they sort of have never been really part of the Chinese market, so them not being big in China is sort of not really hitting them all that much. They do seem to be still doing really well in Europe and sort of looking to re-break America with their EVs. Obviously, that is a competitive market, but yeah, we'll have to see how it goes. And the numbers obviously look far, far better, in terms of balance sheet and that sort of thing with Stellantis. So yeah, this was kind of another sort of nail, maybe not the final nail in the coffin, but just another nail to sort of make me think of getting out of well, Porsche, but basically VW. People obviously seeing it as positive news, but it sort of did the opposite for me and just smacks of desperation. So Process, anybody invested in Process, if you've been sort of keeping up to date with the news, I sort of had been lagging behind the news and didn't really sort of notice what was going on until Thursday, I believe it was. Suddenly my portfolio dropped about £5,000, and I thought, Jesus, what's going on? Didn't sort of scroll down, didn't really see what had gone down, and then suddenly saw Process. So they've done a sort of dilution, bit of financial jiu-jitsu, I'm calling it. They issued a stock dividend of 1.17 shares for every share that you hold. So a massive sort of dilution, but then giving back to the shareholders to sort of, I'm guessing, dilute out part of the South Africa and sort of NASPA's holding. I think they're wanting to get more of it on the Amsterdam exchange, and yeah, so it's not a stock split because they're not just giving shares to everybody that held shares, from the looks of it, and yeah, it's a sort of dilution, but you're not actually losing your share in the business. So it was sort of €65, and it's now €30, and they're still saying total assets, you've got Tencent at sort of $98 billion, and then all of the rest of the stuff, they're saying, and sort of cash and debt basically netting each other off. They're saying total assets are worth $134 billion, 122 billion euros, and that gives 46 euros per share. So still a huge premium on the current share price, and it does mean the Tencent total shares held is still more than the market cap. So yeah, fair enough. I did actually get my shares yesterday, so I've got a little great big drop and slight move along, and then back up again, a sort of inverse Bart Simpson, as they call it in the crypto world. So yeah, slight wondering what was going on, and then realised what they're doing. One day they might sort of get rid of that discount and get up to sort of closer to this value. Maybe not 46.90, because there's always a bit of conglomerate discount. Some people that want 10 cent won't want all of this food delivery and stuff, but yeah, maybe sort of somewhere in between. €40 maybe, but let's see. So still focused pretty hard on the gold and silver. As I say, that's been sort of partly what is doing well for me this week and giving me my rare out performance. And this is one of Raoul Pal's charts, actually about crypto, but I do think it sort of applies similarly to gold and silver. Basically, Bitcoin tied to the global M2 money supply year-on-year rate of change. That's the Bitcoin year-on-year rate of change as well, not the price. But it's basically saying M2 sort of money supply goes in these sort of 3 or 4 year cycles, and yeah, that is sort of partly what is causing the 3 or 4 year cycles in Bitcoin. And he says this M2 money supply is basically refinancing and sort of remonetizing the interest payments on the debt. So most of the debt that they issue is sort of either 3 or 5 year bonds, and obviously when these come up for reissue, liquidity goes up and they're suddenly reissuing lots and lots of debt and sort of monetizing debasing the currency, basically printing more money to pay the interest. So no hope of ever actually sort of paying it properly off. They're just paying the interest. And yeah, the sort of Bitcoin year on year obviously doesn't follow it 1-to-1, because in the bull markets it rockets right up, and bear markets it comes down maybe further than supply. But sort of you can tell there's certainly a trend there, and the M2 has sort of risen off the bottom here. It's still, if you look at the actual M2 chart, it's still sort of uh, flatlining, basically, sort of with a little bit of up and down. But as far as a year-on-year change, it certainly seemed to bottom sort of late last year. And yeah, whether we sort of get a bit of rough time in the economy and sort of various governments start printing, we'll have to see. This is global M2 as well. I do think people sort of focus a little bit too much on the Fed in the US. Obviously, they do drive a hell of a lot. The EU and UK will follow them in sort of whatever they do broadly. But yeah, if other countries are printing, that will sort of have an effect. So I'm kind of using this sort of thesis the same for gold and silver, really. If we're getting a sort of top in liquidity, sort of 3 or 4 years from all the COVID interest issuance, then it's going to be end of 2024, 2025 times when we're sort of expecting the Bitcoin bull market, and I would expect a decent gold and silver price as well, sort of with that devaluing and sort of debasement of the currency. And as I say, talking of interest on the debt, this is US only, of course, but the Fred economic data does give you sort of trailing 12 months in interest paid, and this is sort of, it's been dragging along, on a slow uptrend for sort of 20, 30, 40 years, and obviously this isn't in log scale, so it looks worse than it is when you get to the current times. But yeah, it's sort of been increasing debt, but they haven't had to pay mega interest rates, certainly sort of in the last 10 years or so. If you sort of come to 10 years, they've increased debt, but it's always been at very low rates. And now you sort of get to the rising rate times, and yeah, we were sort of at, or they were at 600 billion a year in interest payments, and since they've raised rates, this is sort of rocketing up, closing in probably by the end of the year on 1 trillion in just interest. So, well, could be 1 trillion next quarter, really. Obviously, they've raised rates so quickly that every quarter they're potentially sort of rolling over a treasury that was 1% or 0.5% or whatever to 5%. And if you take their total debt, $32 trillion, I think they're at now, 33 trillion. Obviously, at the current sort of 5%, 5.25% Fed funds rate, you could think of that as sort of a rolling 1.6, 1.7 trillion in interest. But obviously they don't have to pay all of that, because some of it is 20 and 30-year treasuries and even 10-year treasuries that won't get rolled over just yet. But for the large portion that is sort of 3 to 5, as Raoul Pal says, this will all get sort of rolled over. And I think they've got about 10 trillion or so to roll over sort of in the next year or two. And unless they're saying, higher for longer interest rates, then just means they might be getting up to 1.2 trillion, maybe 1.3 trillion in interest payments, which I don't think they can afford. Or, if they can afford it, that means they're going to be printing an awful lot more money. So that is basically long gold, silver and crypto, and sort of hard assets, at least if you're not into those. So yeah, bearish, but bullish for what I'm in, basically. So that is part of the thesis with the option buying at the moment. So if you come to options profit calculator, take sort of one of my holdings. Obviously, I've got Hymax, Equinox, Coeur Mining, CleanSpark, and Fortuna Silver as sort of that gold and silver play plus Bitcoin plus Himax just as my sort of undervalued tech stock that's a low price. They do kind of have to be low price for the way I want to sort of average in and average out. Otherwise, you're sort of spending $1,000 per contract. And yeah, I came onto here, or on the app at least, on Interactive Brokers in the last week, and noticed that January 2026 options are now available. So this sort of brings me right in line with the sort of anticipated top in liquidity, basically. The sort of January 2025 gives me some of that time, and was sort of the latest that I could do. So I was sort of going for it, and expecting that maybe not all of the move would be done by then, but that they would do okay. But now we're starting to see January 2026. That is sort of predicted to be the sort of maybe a little after the top of the next crypto bull market, for example. That's sort of expected in mid to late 2025. So if I do some clean spark ones, they are very, very expensive at the moment, but that would sort of give me all of the bull market. And sort of something like Himax, where people really aren't anticipating sort of a bull market doing anything for it, you can buy. I did buy 4 contracts for January 2026 at $10. They were a little bit lower than this actually. I got them for $40, so 40 cents, as you can see here, times 100 shares. So I thought that was really, really good. Sort of the January ones that I have been buying are now down to sort of $20, but $40 for basically adding on a whole nother year and sort of potentially getting the full value of that money printing and sort of everything happening potentially after any sort of recession. That gives you sort of maybe a year and a half, maybe 2 years sort of after the recession. Then I see that as really good. So yeah, that's what I've been buying, and I will be sort of looking probably to buy more January 2026. Certainly for maybe things like Equinox Gold and Himax. And I will have a look at the Clean Spark. And sort of Coeur Mining, they've already had December 2025 for quite a while, and I've been buying those. So yeah, January, they have got January 2026, but it's only a month after, so it doesn't really make that much difference. But yeah, that is what I'm sort of potentially, like with selling the Porsche stock off. Maybe I could be putting more into that. I'm kind of thinking £10,000 sort of in the options would be a reasonable number to have. I've got maybe £1,000, maybe £1,500 in sort of cash just in my current account that I can maybe put in, and sort of looking at what else I can maybe sell off and add. Been talking about Porsche and the Vanguard Emerging Markets, maybe sort of sell off a little bit of that, and yeah, go for some of these 2026. So just catching up with some of the news, there was a little bit of UK news come out. Average earnings, including bonuses, was sort of up quite a bit higher than expected. Excluding bonus was as expected, so I'm guessing a ton of people got a bonus, which isn't very good. It's up from last month and was sort of up on the expectation. So yeah, loads of people getting a bonus. That's presumably just going to stave off the inflation coming down, and sort of people moaning, but they are basically causing it themselves. Keep asking for a bonus, as Andrew Bailey says. Employment, though, is sort of not looking good. So the people that are in work are getting pay rises and bonuses, but there's more people sort of getting laid off. 3-month change, worse than expected, 200,000 people down for July, and unemployment was, as expected, up to 4.3% from 4.2 last month. So I think this bottomed out at 3.5%. So we're getting on for 1% of the whole population losing their job since the bottom, and that can't be good, really. So, as I say, people that are in work are doing well, but there's a lot of people that aren't. And the sort of economic output, GDP, was worse than expected, 0.5% down for July, and sort of flat now for the year. Construction output 0.5% down, and sort of well down from where it was sort of on the yearly. And yeah, manufacturing production was down, but slightly better than expected. Basically, all British news not looking particularly good. And then Wednesday, you had the CPI numbers from the US, basically all sort of not looking great. Core CPI, which is what Jerome Powell says he focuses most on, was sort of as expected, down from 4.7 to 4.3%. I don't think that gets the news that it sort of really should do. All people focus on is the headline CPI, which has gone up 3.2%, was expected to be 3.6, and it came in at 3.7. Not quite sure how that's sort of presumably just a rounding error, because the monthly was as expected. And core was actually a little bit higher on the monthly. So yeah, basically all as expected or higher. So whether that means next week the Fed rate rise, or I expect they'll pause again, but sort of talk of rises, maybe talk about the November rise potentially. That's what a lot of people are pricing in. It's sort of looking like a pause next week and a rise in November. So we'll see what they do. The EU did put theirs up, so 3.75% to 4% as the deposit facility rate, but the sort of main ECB rate is now 4.5%. So yeah, getting towards the UK and Fed rate. They're always sort of a little bit behind. And that was pretty much the news for the week. So yeah, as I say, pretty much a good week all round for anything mining. Anything sort of tech-wise has sort of had a bit of a rough week with the Nasdaq going down sort of across the board. Broadcom sort of having a bit of a down week. Taiwan Semi, as I say, back under 90 now, so that's not looking all that good, but yeah, not something that I'm sort of looking to pile money into just yet. Rio Tinto up to 53. That's had a really good week. Steel, iron ore prices sort of looking okay, sort of rising even in the face of sort of Chinese weakness. Vale sort of doing pretty well. Stellantis sort of holding up really well. Sort of everything else, having a rough week, and Stellantis at 19.25. So really happy with them. On the ISA side, that is doing well, because as I say, CleanSpark isn't sort of looking too strong. It's near enough at my average cost for this ISA. But Coeur Mining having a great week. Equinox Gold similar. So I wasn't able to sort of pile into the options as I was hoping to. They've sort of risen up a little bit, but yeah, we'll see. And then IG sort of largely unchanged. Pan American sort of doing really well. Atalaya sort of doing quite well. But the Interactive Brokers side, this is sort of getting a bit larger now, with Chinese tech has sort of barely moved, slightly in the red for the week, it looks like. But the options, sort of Coeur Mining, I haven't bought any, and that's now £2,300. So that's up to a few £100 for the week. So you can see the sort of stark move in that you can get in options. That's sort of 15% up from last week without me buying any, while the stock is up sort of 7. Equinox sort of similar, £1,400, haven't bought any. CleanSpark has sort of moved slightly higher despite the stock being ever so slightly down. Hymax, I did buy those 4 2026 contracts, so that's been dropping, but I bought a little bit more, probably looking to buy even more. And yeah, Fortuna sort of slightly up. I think I did buy 3 of those. So yeah, looking to carry on buying. I see this as my sort of most highest risk to reward. Basically, it's solid assets that I think should do well underlying these in the miners, and then in sort of gold, silver, and Bitcoin underneath those. So it's sort of leverage basically on something that I think will do well, rather than going for a risky sort of crypto altcoin or something where you haven't got sort of quite as much confidence in the underlying asset. So that's the thinking with the options. So as I say, all these are at sort of 6,000, just under £6,000 now, and I think pushing this up to sort of about 10,000 with maybe some Porsche money and sort of cash out of the bank, I think will be the next move. Maybe obviously not next week, but yeah, over the next sort of few weeks certainly. So yeah, we'll see where we go. Leave your thoughts in comments below, and like and subscribe. See you soon.